Hey investors, let's do a little question and answer session from my Patreon members where they have given me some questions and I'm going to try to provide the answers. And if you want me to answer your question in a video, consider joining my Patreon. It's only $10 a month and I do a video each weekend in addition to these Q&A sessions and a variety of blog posts. A couple other things before we begin. Number one, this is just for education. This is not financial advice. I've been investing since 1996. I specialize in technical analysis, but I'm not a financial advisor. I'm not a stockbroker or anything like that. And two, please consider checking out my partner, Seeking Alpha Premium, the #1 fundamental analysis database on the web, in my opinion. And three, guess what? There is no three. There's only two. Okay, let's get to the questions. The first question is kind of a general tactics question from my internet friend Shane, who has a podcast on spy novels and spy movies called Spybrary. And we were talking about the breakout of MongoDB. And he said, I never know how to, I'm sorry for breaking eye contact. I'm looking on my other monitor here. I never know how to play stocks at the open. Should I wait an hour? Do you have a rule around that? ? So, gosh, like many other things, investing is an art, and black and white rules don't work perfectly. And there's also no free lunch. There's pros and cons to any strategy. That being said, let me tell you what I told him. So it depends on two things. One, market conditions, and two, what other stocks in that industry are doing. Let's handle those one at a time. So let's go from the best market conditions to the worst market conditions. The best market conditions, a raging bull market, what Mark Minervini calls an easy dollar environment. Stocks are breaking out of nice looking bases, and for the most part they're running up to 20% before forming a new base, and probably 3 out of 4 of them are running all the way up to 20% or farther without a pullback. So in those conditions, then you want to jump on breakouts right out of the gate, the beginning of the day, 6:30 a.m. in my case, because I'm on the Pacific coast. And obviously it's going to take you some intensive study of charts and watching previous breakouts to know that we're in those conditions. But let's just stay hypothetical here. So the next would be kind of a yellow light environment, the type of which we are in right now, where about half the stocks break out, run up to 20%. Half of them, the other half, go up, for one day and then squat or go up a few percent and then pull back and then form a cap on top of the base or break out for real. So in this case, there's a few things you can do. Personally, what I like to do is buy, say, half at the initial breakout, and then buy the second half at the end of the day if the breakout is held up and if it's not overextended, if it's not up more than, say, 3% or so. Alternatively, you can buy half at the breakout, and then if it does take off, you can wait for a pullback, and if it goes up 5 or 7% and then pulls back near the lip line and then moves up again, bounces, then you can add the other half. And sometimes in that case you don't get that pullback and then you only have a half position, but that's okay. A big percentage gain on a half position is good, right? Then the next, I guess, variation would be a bear market, and where most stocks are either squatting intraday or pulling back and forming a cap, or just pulling back for a few days before taking off. in which case I would not buy the initial breakout. I would wait and buy at the end of the day. If the breakout has extended, I'd buy like a half position at the end of the day, and then I would save the other half for a pullback. Then the last one would be extreme bear market conditions, where probably two things you could do. You could be short, you could be in cash, or what Minervini did to win the investing championship. I think that was in 21. When was that? I think 2021. What he was doing was you get these really nice bases that would form, and they'd break out, and then they'd squat intraday or the next day and pull back into the pattern, or even turn tail and blast through the bottom of the pattern. What he would do is buy low cheats or cheats, and I'm not going to explain where those are in this video, but lower in the base as it's working its way up the right side, and then selling into the breakout and swing trading it like that. Now, the second thing, so you think about the general market conditions, then the second thing is to look at what other stocks in the industry are doing. Let's say you're watching the semiconductors, three semiconductors break out, and then without pullbacks, they extend to 20%. And now you see a fourth semiconductor stock that set up really nicely and just broke out. Then you want to jump on that breakout instantly, because birds of a feather flock together. Chances are it's going to do the same thing. Conversely, if you see three semiconductor stocks break out, go up 2 or 3%, and then pull back and start forming a cap, then you don't want to buy the breakout of that four semiconductor stocks. You're going to want to wait and watch for a pullback and see if it will break out for real. Hope that helps, Shane. Let's look at another question. Okay, Sith wanted me to look at Arlo Technologies. Short answer is this looks great. I hope you're already in it. Gapped up today, 11% move. Now it's too extended. You're going to want to wait and see if that gap holds up. Let's march through. Let's look at this one on MarketSmith. Arlo Technologies provides security cameras and a cloud-based platform with a variety of connected devices. So right out of the gate, one thing that I really don't like about it is it's under $12. Stocks that are under $12, Minervini says, and anecdotally I agree completely, they just are a lot more volatile. They're bucking Broncos, as he calls them. You get these wide-ranging days, and if you're doing tight stops of averaging around 5%, it's really easy to get snapped out of these ones. And often they continue going up, but they continue going up without you. And then sometimes they just kind of implode. Whereas once stocks get above $12, you get more institutional support, and they are more methodical and not so volatile. So that is definitely an X on the cons of this stock. Looking at it, it has no earnings to speak of. Its sales were decreasing, but they're still in the negatives. So this is trading completely on future expectations. I don't know anything about the fundamental story. I'm not really familiar with this one. But this goes to show you, this stock has gone from 3 to 11 with terrible fundamentals. So certainly having, big increases in sales and earnings are great when you can get them. That's the O'Neill way. But coming out of a bear market, many well-performing stocks are going to have poor fundamentals. And if you're waiting for really good fundamentals, you're going to miss out on a lot of good moves. Let's see. But on an annual basis, the company is making money. 2021, negative 11. 22, negative 0.07. 23, 0.22. 24, 0.33. So it does have a profitable trend. Looking at the weekly here, you've got a nice traditional base here. You got a base, you got a little cheat, you got a handle, and it has cleared most of its historic supply. We're going to ignore this. This price action over here was more than 5 years ago. Those guys are either long gone or they're holding for life. Relative strength of 99, it's outperforming 99% of other stocks. Relative strength line is in an upward direction, clearly outperforming the S&P 500. No dividend. Let's see, what else can we say about that? So I like it a lot. I like this stair-step movement. You've got kind of a Darvis box here. So unfortunately, like I said, it moved out of this big gap. I would probably give it 10 days and wait. If you're not already in, I'd probably give it 10 days and see if the gap's going to fill or if it's going to get support at the gap, or see if we start getting some post-gap drift. Let's keep moving. Okay, JJ asked about CELH, Celsius Beverages. This is one I know really well. I was fortunate enough, this is the monthly chart, was fortunate enough to play a good part of this move in 2020 when it went from a nobody in the beverage industry to now I think it's third. I think it goes Monster and then Red Bull and then Celsius. They have a little different spin on energy drinks. They tout themselves as being healthier, kind of caffeinated health drinks, if you will. Here you see the monthly chart, primary base down here at $6, and just a few years later we're sitting up here at 160. Let's dial in a little bit more here. Actually, let's go to the daily. So the last quarter's numbers are great. Plus 344 in earnings, triple-digit earnings, plus 95% in sales. Gross margin, only 44%. That's certainly not software margins, but, and it looks like margins are stable, so we're going to say margins are neutral. But it went from just making a tiny bit of money in 2021 to losing money in 2022 to making $1 in 2023 and $2 in 2024. Most recently, we saw this big gap out of earnings. And so the exact same thing that I was saying about Arlo, this is what I would have done with Celsius. So you get this big gap out, and then you wait about 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And that should give you an indication whether that gap's going to fill or not. In this case, it went down and retested the gap, and then we got some nice tennis ball action. So the place to have bought the stock right here, JJ, would have been right here. Now, this is a hold for me. I would love to be in this. I would not be comfortable buying it because you're pretty extended from the 50-day, and you are kind of wedged up in this really narrow trend channel. I would wait patiently for it to start moving sideways again and to let the 50-day catch up. I definitely would like to find an entry point on this one because it seems like it definitely is going to be a good long-term hold. But I like to be really surgical in my entry points, so I'm going to be patient and wait for a perfect entry point. No dividend on this one, by the way. And here's the same chart on my, in my Patreon on stockcharts.com. Why am I not in this? Right. Here you had this nice, this is the 1 year chart. You had this wonderful 1 year, double bottom, Eve, double bottom. This is called a fractal. Look, you got a double bottom within the double bottom. You got a double bottom within the double bottom. Those are called fractals. The time to buy this thing would have been this low cheat here. You could have bought off of this cheat, but not right in front of earnings, so never mind. Then this gap would be way too big, but like I said, you do the pullback buy right here. Too extended right now. For me, anyway. You do what you want. Okay, and Karthik wanted to talk about IOT. Here's the 1 year chart. Let's look at it in MarketSmith first. Although this is kind of fun. Here you have a great head and shoulders. So you got your shoulder. Here's your head. Here's your shoulder. Draw a line across the neckline. Buy when it breaks out of the neckline. If you have some quiet price action, and you did have just enough, in my opinion, that's your perfect buy point right there. Let's come back to this in just a second. Let's look at it on MarketSmith. Okay, Samsara IoT provides an end-to-end solution that allows businesses that depend on physical operations to harness IoT data. That doesn't mean a whole heck of a lot to me. Computer software enterprise, that certainly has been a hot niche over the years, and looks like it is just coming out of its primary base. This is the weekly chart. You've got a textbook, double bottom, handle, break out of the handle, firmly in stage 2, getting some resistance as it hits all-time highs. Relative strength of 98. That's fantastic. This stock company is just trying to turn profitable. It's got a nice trend towards profitability, but it's losing money. And if you look at sales, this is the sales over the last 8 quarters in the high 40s and 50s. Certainly high sales, and stocks can do really well with big revenue growth and losing money. Amazon did that for many years before it made money. I'm not saying this is Amazon, but this is a bigger company, 14.6 billion shares in market cap. Now let's look again at that 1-year chart. Oh goodness. Like a bunch of stocks, this stock would have been great to buy just a couple days ago. The semiconductors and a lot of the software stocks pulled back hard, and it looks like the pullback's over. See this big gap out of earnings, blasted off into space. This doji here, is that a gravestone doji or is that a dragonfly doji? Wow, I'm forgetting my Japanese candlesticks. Let's look it up. Yeah, it's a gravestone doji where the price runs up, opens down here, runs up, closes down here near the low. And that's stalling action after a big run up. That generally says that the trend is about worn out, and so we could have timed it out and sold that day or the day after. Anyway, it rolled over, and now seems like it has gotten support here at 25, and so you've got this little spinning top doji, big up candle. So the time to have bought it, hopefully you're in it. If you're in it, I would definitely say hold. The time to have bought it would have been yesterday. So what we want to see now is for some VCP action. Watch how I do this with the mouse. So we just want to see it volatility contract, and contract, make a little tight pivot area, and then when it resumes up, that would be our spot to buy. Right now it's just a little bit extended. You've got a little gap here that it seems to be getting resistance at. So this is a hold for me right now. Long term though, it's looking good. Okay, 𝗦𝘂𝐿𝐴 says, hi Joe, what do you think if I add Nvidia if it breaks 428? So what I told him was, if it broke all the way up to 428 from where we're at right now, that would be a little bit extended and you're coming right into this supply. I would rather, you got a little 3-day pivot here. I would rather see you buy, here, 1 second. Let's just get really surgical here. So the high on June 27th was 419.40. So I would rather see you buy on a move above 419.40, say 419.43. And that'll give you a little bit of movement before this supply. And then you can set your stop. The low is 401, so you set your stop at 399. That gives you a pretty tight, where you've got asymmetric leverage. You're pinching off the downside and unlimited upside. I would rather you see that, do that in the next few days if it moves up there like I just mentioned. It might not do that. It might continue sliding sideways and sagging down and down to the 50-day. I would rather see that. See how it made this nice high tide flag, if you will, and then when it got close to the 50-day, the institution started buying again. That's what I would like to see it do. and that would be a safer entry point. I've recently bought it right here, added to my position on June 13th, and I'm about flat on the position. Long term, there's no question. If we look at the 20-year chart here, let's look at this thing on MarketSmith. This has been one of the great long-term holds of the 20th century, and it seems like that's going to continue with the artificial intelligence movement. So a different way to play this would be to ignore everything I just said and just dollar cost average into it. Buy one share a month or whatever you can afford for until the business seems to be losing steam. That'd be one way to play a lot of these great long-term charts like Tesla or Nvidia or Apple and that sort of thing. Personally, I like to be really meticulous. Although I will say, I've got a 17-year-old son, and we just buy and hold his stocks versus really tight entry points and so forth. And he's doing pretty darn well with a lot less work. Just buying and holding really strong companies. Let's keep going. Okay, Brooks says, what are your thoughts on URI's right side on the weekly? So United Rentals provides construction industrial equipment rental sales. This is part of the broadening of the market that I'm really happy to see. A few months ago, it was just like biotechs and healthcare and semiconductors, and now we're starting to see some nice broadening, including this one, equipment rentals. So on the weekly, what are my thoughts about the right side? So let's get to that. I'll get right back to you on that. Really a nice looking long-term chart. This is the monthly chart, 20-year chart. Certainly you can make a case for buying and holding this one. So in the immediate term here, you've got kind of a nice head and shoulders base. Here's your handle. Here's your breakout. Moved into stage 2, pulled back into the base. Now it's coming back up. So this is kind of an elaborate pullback play. This base here technically is too narrow, too deep and narrow. So I don't really like it per se, but the market's improving. This industry is pretty hot. I'm seeing a lot of industrial equipment stocks moving, and it might just blow out of here and work. This stock is spectacularly profitable, $39 a share in 2023, 30% plus earnings and sales. So the time to have bought it was right here. It gave you a nice little low cheat right here. So this would have been a great spot to buy it. And also then just 3 days ago right here. But now it's getting pretty extended. So if you bought down here at 330, it's almost at 450. We might see some selling pressure from the swing traders and these guys who were trapped just a few months ago. Whereas if you have a nice wide shallow base like this, gives it a lot more time for the swing traders and the trapped buyers to get the heck out. So at this point, I wouldn't be buying. See all these trapped buyers right here? It would make sense for this stock to stall out right here and form a handle or come back and retest 400, something like that. This is a hold for me. Okay, Sith wanted me to talk about WEAV. This is my best performing current position. This is a textbook power play. Let's look at the fundamentals real quick, and then we'll come back to the technicals. Let's look at MarketSmith again. So WEAV Communications develops customer interaction platforms for small, medium-sized businesses. From what I understand, a lot of their sales are coming from the healthcare industry, where they set up communication and interactions for doctors' offices. And let's see, weekly chart, it's a recent IPO, just coming out of its IPO base, had the misfortune of IPOing right at the top of the bear market. That was brutal. Since then, though, it's made a nice primary base and is clearly in stage 2, 99 relative strength. One thing I really don't like about it is it's a low price stock, under $12. We talked about those low price stocks being bucking Broncos, not making money yet. Pretty good sales, right around 20% or so. Now let's go back and let's look at this power play. A power play, as explained in Mark Minervini's book, How to Make Money in Stocks. Sorry, that's O'Neill's book, isn't it? Trade Like a Stock Market Wizard, or is it his other book? Thinking Trade Like a Champion. I had to look on my bookshelf. In any case, power play, you have months of sideways dead price action, blast off of 100% or more, and then you have a tight flag where it gives back the less the better, 25% or less ideally. You wait at least 10 days. This was 1, 2, 3. This was like literally 10 days. And then you buy, you buy the breakout, and you pray to the market gods. You set a stop, maximum of 10%, preferably beneath this flag if it's less than 10%. In this case, it was. And then you just see if it goes. And when these things go, they work really well. Or you can get stopped out in just a few days. Normally, if they're going to go, they go right away, or they stop you out. And in this case, I took half off for plus 27, and I'm up, gosh, I don't know, 35% or so in less than a month. So what do you do now? Do not, well, you do what you want, but no way in heck I'm adding to this position right now. You've got 36% with virtually no pullback. You need to wait. At least I'm going to wait for another flag of sorts of at least 10 days where it flags sideways or, sags down a little bit. Or maybe it'll make a big base of a month or more and let the 50-day catch up. Look at all this buy volume. That's really good. Let's do 5 more minutes. What do you say? Then I got to get outside and enjoy this beautiful day. Okay, let's say JJ is talking about LNTH. She said, don't know what happened yesterday. This was a couple days ago. It was building the right side of a base and swung down by 9%. Thought it closed higher to 6% down UGG. Yeah, UGG is right. I don't like how this is looking at all. This is looking like a Head and Shoulders top. So obviously it had this wonderful base, and I suppose we could call this a cheat, and to make some money off of it. But right now, look and see what we have here. Here's your shoulder, here's your head, here's your shoulder. You draw a line across the neckline. In fact, let's just do that. Here, watch. You draw a line. Let's do it in red because it's ominous. Right here. Now, if it closed beneath the neckline, then that validates the Head and Shoulders top, and that's pretty reliable pattern that it's going to go down fairly significantly. In fact, you can measure this and kind of eyeball and estimate it. But if it breaks beneath 82, I would probably sell half my position. And if it closes beneath 82, I would be definitely decreasing, if not getting out of it entirely. Now, sometimes it'll come down and it'll test this. This is support. It'll test this support and start running right back up. And hopefully that's the case. Although you've got a bunch of congestion now. So personally, if I was sitting on a profit, I would get the heck out of it right now. If I was sitting on a small loss, I would wait and see what happens with this neckline. But yeah, this one's coming in. I don't know the fundamental story as to why, but certainly it's acting weak at a time when the market is pretty strong. Medical imaging agents. Maybe it had some bad fundamental news. I really don't know. Okay, Karthik wanted to ask about RNW. I don't know anything about this one, but looking at the 1-year chart, this looks like a, it's in a downtrend. This looks like a short. If anything, you can we'll talk about that in just a second. But Renew Energy Global, Indian-based renewable energy operating in utility scale wind, firm power, and solar energy projects. So certainly solar is the future, but don't get seduced by the story. What is the stock doing? The stock's going down. Last quarter, it had triple-digit earnings and good sales. So it's possible that it might make a turnaround here, but look at that pronounced downtrend. And we see these spikes. The institutions are selling into these spikes. It's a low price stock, 5.40 cents. I would steer clear of this, me personally. Now, that being said, any stock can double or triple, right, if the fundamentals change. But as far as risk reward, it is way too risky. Let's just look at this. RNW, relative strength of 25. It's only outperforming 25% of stocks. Let's just, so this, I believe, was that earnings spike, was it? No, oh no, that wasn't an earnings spike. I'm not sure what that spike was, but clearly institutions are selling into these spikes. So if you were bull, and I really don't want to be short right now because the market is improving, but if you enjoy playing playing shorts, they do move down quickly, faster. Stocks take the elevator down, right? So they take the stairs up and the elevator down. What you could do is when it spiked near this trend line, when it came up and then faded, you could short with, a 5 to 10% stop, and you might just catch it in the right place, and you could short it for 10% or so. The good news, I suppose, if there's any, is that if you just look at the last month or so, you do have kind of some sideways price action starting. But I would be really hesitant to buy this see the 200 days in such a steep downtrend. I would at minimum want to see the 200-day flatten out. All right, guys, getting a phone call. I'm going to, okay, yeah, that was the phone call saying I gotta wrap this up. Let me know if you have any questions or comments regarding these stocks or strategy. And Patreon members, I'm going to try to get out my video hopefully tomorrow afternoon, Friday afternoon, so be looking for that. And if you do want to join my Patreon, link in the description below. And there's a link to Seeking Alpha Premium. I didn't really talk about that today, but it's a great spot for fundamental analysis. Hey, take care, everybody. Really nice to see the market improving, isn't it? Despite all the doom and gloom about the economy, the market front runs the economy, and we are seeing the market turn around before the economy, which is normal. Take care.